Hey everyone, and welcome. So today we're going to talk about taxes. But wait, before you tune out, we're not talking about the boring stuff you already know. We're going to dive into 4 powerful hacks that go way beyond the usual Section 80C. Hacks that honestly, most people don't even know exist. We're talking about how to stop leaving your hard-earned money on the table. Okay, let me ask you a question, and be honest. You get that pay slip, you look at the tax deducted column, and you just feel that little sting, right? That feeling of, wow, where did all that money go? If that's you, you are definitely not alone. But the good news is, today, we're going to turn that regret into a real, actionable plan. All right, let's just get straight into it. What if I told you that there is one single, massive mistake that almost every salaried person makes, year after year? It's a really simple oversight, but man, it costs people thousands in taxes they absolutely did not need to pay.
And here it is. The biggest mistake is thinking you're done once you've hit that standard 1.5 lakh limit under Section 80C. You know how it is, right? We put our money into a PPF or an ELSS fund, we hit that number, and we just kind of pat ourselves on the back and think, job done. But here's the secret. That's not the finish line. It's just the starting line.
So let's start hacking our way to better savings. Hack number 1, and this is a big one, is all about your salary structure. Think of it like this. It's about playing offense, not just defense. It's about optimizing your pay before it even gets on the taxman's radar. So here's how this works. It's all about your pay structure. See, a high basic salary is 100% taxable. But what if you could talk to your employer and structure it a bit differently? Instead of a super high basic, you ask for higher allowances. We're talking about things like your house rental allowance, HRA, or your leave travel allowance, LTA. These are often partially or even fully tax-free. And it doesn't stop there. Food coupons, mobile and internet reimbursements, all of these can be tax-free perks. The key thing is your total salary stays the same. You're just slicing the pie in a much smarter way. Now, I know what you might be thinking. Is this allowed? And the answer is yes, absolutely. Let's be super clear here. This is not some shady loophole. It is 100% legal and a totally standard practice. In fact, most employers are more than happy to do this for you. Why? Because it's a win-win. They get to offer you a more attractive package, and you get to keep more of your own money. All right, moving on to hack number 2. And this one is a real hidden gem. I call it the overlooked NPS deduction. Honestly, it's such a powerful tool, and it baffles me how many people just don't use it. Just look at that number. 50,000 rupees. That is an extra tax deduction you can get just by putting money into the National Pension System, or NPS. And here's the absolute killer part. This 50,000 is over and above your 1.5 lakh 80C limit. It's a completely separate, extra bucket of savings. So what does that mean in real money? Let's put some numbers to it. Say you're earning 10 lakhs a year. By using this one NPS deduction, you could save around 15,000 rupees in tax. Just like that. That's real cash back in your pocket from one smart move. Okay, hack number 3, the health insurance advantage. Look, this one is just a total no-brainer. You're protecting your health, which is priceless, and you're saving on tax. It's the ultimate win-win scenario. So let's see how these deductions really stack up. First, you've got a deduction of up to 25,000 rupees for the premium you pay for yourself, your spouse, and your kids. That's pretty standard. But here's the part a lot of people miss. You can claim an additional deduction of up to 50,000 rupees for the premium you pay for your parents' health insurance. It's a huge tax saver. So you do the math. 25,000 for you, 50,000 for your parents, that's a potential total deduction of 75,000 rupees just from health insurance. And again, this has nothing to do with 80C or NPS. You see how we're layering these savings on top of each other? It's massive. All right, time for our bonus hack. And I'm going to be honest, this one might be the most important decision you make all year. It's about choosing your tax regime. Think of this as the master switch for your entire tax plan. Get this right, and everything else works better. Get it wrong, and you could undo all your hard work. So here's the basic choice you have. The old regime, that's the one where you can claim all those deductions we've been talking about. HRA, LTA, 80C, all of it. On the other hand, you have the new regime. This one gives you lower tax rates right off the bat, and it's a big but, you have to give up almost all of those deductions. There's no single right answer here. The best choice for you can literally change every single year, which is why comparing them is absolutely non-negotiable. And please don't think this is a set it and forget it kind of decision. It's not. Your life changes, right? Maybe you got a raise, you started renting a new place. Anything can shift the balance. What was a great choice last year could be a terrible one this year. And seriously, choosing the wrong regime, it's literally like taking a pile of your own cash and just giving it away to the tax department for free.
Phew. Okay, that was a lot of information, I know. But it's all super valuable stuff. So let's bring it all home. Let's recap and put it all together into a simple, actionable blueprint you can start using like today.
Here it is, your 4-point tax saving checklist. Number 1, chat with HR about restructuring your salary to max out those allowances. Number 2, grab that extra 50,000 rupee deduction with NPS. Don't leave it on the table. Number 3, maximize your health insurance claims for you and your parents. And number 4, the big one, every single year. Compare the old versus new tax regimes. No excuses. Look, knowing this stuff is great, but doing something with it, that's what makes the real difference. So as we wrap up, I want you to look at these 4 hacks and ask yourself a simple question. Which one of these are you going to put into action first? What's the first step you're going to take to redesign your tax blueprint this year?